Welcome everyone. My name is Sharma. If this is your first time, you're welcome. Thank you so much for stopping by. On this channel, we focus on all things investment with a special emphasis on investing in the stock market and travel. So thank you so much for stopping by. Don't go anywhere. I'll be right back. Hello everyone. If this is your first time, you're welcome. My name is Sharma, and today I will be giving some of the reasons why I chose to invest in covered call ETFs, okay? Okay, so just to give a recap, I am on a quest to take my portfolio from $0 to $10,000 by the end of the year using Wealth Simple. Now, Wealth Simple is a platform that allows us to invest in the stock market at zero commission. Of course, you are able to invest in US stocks, but if you do, keep in mind that you would have to pay a commission and an exchange fee, okay? But again, Wealth Simple allows you to invest zero commission Canadian stocks. Now, I am investing for the long haul, predominantly focusing on dividend paying stocks, okay? Because I want to build my investment so that when I retire, I could live off my dividend accumulations, okay? The funds that I generate from my dividend payments, okay? Okay, so ETFs are exchange traded funds, okay? And every now and then you may see me look down. I have some notes jotted down just so I don't forget anything that I would like to cover, okay? So my apologies ahead of time, okay? So it is a fund that can be traded on an exchange like a stock. So you can buy and sell daily on these exchange, okay? Okay, so an ETF gives the investor the ability to diversify across industries, okay? So if you choose an ETF, you can choose one that may have some utility stocks, some communication stocks, some technology stocks, some health stocks, or you could choose an ETF that may have a certain percentage of US stocks, a certain percentage of Canadian or European stocks, and Asian stocks. So there is a lot of options depending on your needs. So it's not one coat fits all, which is amazing because all of us are different and we have different needs, okay? Okay, so that is what ETFs really, a general overview of what ETFs are, okay? Now for covered calls, why did I choose covered calls, okay? And let's go back. Before I get into covered calls, there's some different reasons why different people choose to invest in ETFs. Maybe we're brand new investors and we're not too sure of how to go about doing our research to choose the appropriate stock that would meet our needs. And since ETFs pools different stocks into one fund, it really helps us take away from having to worry about, am I looking at the right information to choose the stock that I need? So the ETF fund managers, they will take care of all of that. Or maybe we're busy and we really don't have the time to keep following up every couple of months to see how the company is performing finance-wise. Are they always generating consistent income, or are they always in debt? Okay, those are some of the things we need to look at, okay? And some people may not just don't want to do any investigation. They prefer to just choose the ETF and trust the fund to take care of all the day-to-day activities, okay? So that's some of the reasons why some of us may choose ETFs to invest in. Now, as I said, I chose covered call ETFs, and some people may find them a little risky, and that it can be the case, although depending on the manager that you use, that, or the, the fund that you choose to invest in, and the manager that is taking care of the covered call ETFs, may be quite trustworthy, or a company that's been in existence for a while. So the public is well aware of these companies, and so you have some form of comfort knowing that if you invest in a covered call ETF, it would be fairly well managed. Okay, okay. So just to review, what are covered call covered call ETFs, I should say. Okay, so covered call ETFs are, when an investor invests or has a long position in a particular asset, sells that asset, and was able to generate some profit in the process, that is called a covered call option. Okay? And one key approach to covered calls is the call option. The buyer of that call option is obligated to pay a premium for that asset, or to buy that asset. Okay, and overall that could mean that if the value of the assets go lower, the losses may be less, but it still gives you the option as a seller. When you're selling it, you can still get some profit, right? And that is provided that the call were out of money. Okay, so that's a general overview of why or what covered calls are. Okay, and some of the things that you look at when you're trying to decide which covered call that you could choose, and that could be relevant for any ETF. I would look at the management tenure. How long has the managers been in place that is taking care of that fund? The longer they're there, the more experience they would have with that fund, and that could be very helpful. Now we would also look at the management expense ratio, the cost to manage that fund. Okay. Also, we'd look at the total amount of assets that is held in that fund. The larger the fund, the more attractive that fund could be. And of course, the dividend yield. For me, I was looking for dividend yields of 4+%. Okay? And so for the cover calls I chose, they average from 7% to 9% yield. So that's fairly attractive. So those are some of the reasons why I chose covered call ETFs. Okay, now there's 3 covered call ETFs that I've invested in. Okay, so one is the ZWU, and that is a utilities covered call from BMO. And some of the industries that is in this pool of funds are Canadian Utilities, TransAlta, which I also own outside of the fund, also Fortis, Hydro One, Rogers, and TELUS. Those are some of the industries or the companies that is held in this fund. So if you didn't have this fund outside, or you didn't want to research or do any research to buy these funds on your own, if you invest in this fund, it will cover all of those companies. Okay, so the yield for the ZWU BMO covered call is 7.53 at the moment. It has a net asset of $1.1 billion, and it has a management expense ratio of 0.71%. Okay, and the date that this covered call was created or was released to the public was October the 20th, 2011. Okay, so that's the start date. So the next one I invested in was ZWC. Okay, and this is a high yield performing covered call ETF. And some of its holdings are CIBC, Scotiabank, Manulife, BCE Inc., TD Enbridge, National Bank. Again, these are some of Canadians' top performing banks with Manulife and BCE in there. So it's a nice little mixture of all the some of the most well-known companies that you can find throughout Canada. And so the starting date for this ETF was February the 3rd, 2017. The management expense ratio is 0.72 and the yield is 7.49%. The net asset is $985,024 million. Okay, so that is the net asset for this covered call ETF. Okay, so the next ETF is HHLB, and this ETF focuses on pools of companies that are healthcare related. Okay, and this is a company, this is a fund actually that is diversified across different continents. So you have American companies, you have companies from Europe, different European countries that are involved in this fund, which is amazing, right? And you get, this is a Canadian ETF, so you don't have to pay US dollars, but you still have exposure to US companies and European companies, okay? So some of the holdings are AstraZeneca, Pfizer, which are some companies that we hear in the news quite often because they provide some of the shots that some of us are taking because of this pandemic. There's HCA Healthcare Inc., Anthem Inc., Johnson & Johnson is also one of these stocks in here, United Health Group Incorporated, Bristol & Myers Squibb Company, okay? So these are some of those very popular companies that we're aware of that do business in different countries around the world, okay? And so this ETF started February 2020, so this is fairly new, that's last year. The management expense ratio is 0.85%. There's a yield of 8.53% at this time, with a net asset of $4,224,000. Okay, so again, this is a fairly recent ETF, but I like the option that it's fairly spread across continents. So it gives me exposure to different continents. So I'll give you a geographic allocation of this fund. So for US companies, it has 80%, UK 5%, France 5%, Switzerland 5%, foreign currency forwards 3%, and cash and other assets and liabilities 2%. So you can see there's a fairly vast, diverse amount of companies from different continents. So I really like that option. It really gives me that option. So you can see from the 3 ETFs that I've chosen that I have a nice spread of exposure to different industries. And that is why ETFs can be so helpful, because it helps you diversify across different industries and continents, okay? So this is some of the reasons that I chose to invest in covered call ETFs. And these are the 3 covered call ETFs that I chose to invest in, okay? So if anyone out there too has invested in covered call ETFs, you can leave a message down below, okay? Or any other message. If you have questions, just leave a message down below and I'll respond. Also, please don't forget to like this video, subscribe to this channel, and share. I really do appreciate everyone who stopped by and stayed till the end. As I said, I'm using Wealth Simple platform, the platform. So if you're interested in starting this investment journey, I would leave a link in the description box below to Wealth Simple, okay? So thank you again so much for stopping by. I do appreciate that you came back again. And for my new visitors, please don't forget, as I said, to subscribe and like this video, okay? Thank you so much. Have a good one, and I'll see you in the next video.